We've just come out of the longest bull market in American history. And because of this, we've had a lot of friends coming to us asking how to invest in stocks, should they invest in stocks, where to start in investing in stocks. And so we decided that it would be a good idea to create this video because investing in stocks can be a great way to build wealth on your financial independence journey. But without the proper knowledge, it can also send you backwards. And so we, in this video, are going to talk about the basics about individual stocks, what they are, how to make money from them, and stay tuned to the end as we'll be going through step by step how to buy and sell stocks. Stay tuned. Hi guys, I'm Cece.
And I'm John.
Welcome back to our channel Millennial Fire, where we give practical tips on reaching financial independence and early retirement.
So today is going to be all about stock investments. And I know this may be a topic that's overwhelming for some of us, but hopefully by the end of this video, you'll have the basic knowledge to understand what stocks are and how they work. And while we're talking about stocks, we just want to make sure that we take time to clarify that we're specifically talking about individual stock investments in this video. There are tons of ways to invest in the stock market, including index funds, mutual funds, ETFs, investing through your 401k, HSA, things like that. But we're going to cover those topics in later videos and focus specifically on individual stock investments in this video. And also, with that being said, individual stock investments isn't necessarily an investment vehicle that we use as a primary source of working toward our wealth building for our financial independence journey ourselves. But we understand that it may be something that you would like to include in yours. So in this video, we want to make sure that we give you the basic knowledge in case you choose to do so. So what is a stock? Long story short, a stock is simply a way to delineate ownership in a company. A stock can also be called a share, by the way. And so let's say, for example, I decide to buy a stock in Starbucks or Google or Amazon. I'm buying a piece of ownership of that company. Now, don't get confused and think that just because you buy a stock, you automatically become the CEO or you can make the majority decisions in a company. No, but you do actually own a portion of that company from that point. So this gives you the benefit of benefiting every time the company benefits in their value. But inversely, you could also get the detrimental side of things. When the company doesn't do well, your stock also won't do well either. And so when you buy a stock in a company, you then become a stockholder or a shareholder. These words are often used interchangeably. And to make things simple as possible, we're going to break down stocks into two different categories that make it more easily understandable for us. So you have stocks that are dividend stocks, and then you have non-dividend stocks.
So how do you make money from stocks? There are two different ways that you can make money. One of the first ways that you can make money that we'll explain in this video is when you buy a stock that has a dividend. A dividend is kind of like a reward that a company gives you for investing in their stocks. And so you can kind of compare it to an annual percentage yield from a savings account. So if you're in a savings account, hopefully you have a high yield savings account by now that says that they'll pay you 1.5% for the year of whatever money you have invested into that bank. They will pay that to you monthly until the whole 1.5% is paid to you for that year. It's similar with a dividend from a stock. So for example, AT&T, their dividend price is usually about the same, around 7%. That means that they will pay you 7% of whatever you have invested in their company. They'll pay that to you, and usually it's quarterly, but for different companies it could be different. But they will pay that 7% to you in that year. And whenever you buy a stock that has a dividend yield, it is important that you know what the ex-dividend date is, because the ex-dividend date is very important because If you invest in the company on that date or after, you will not be qualified to get the dividend for that time period. So whenever you decide to invested in a stock that has dividend, it's very vital that you know what the ex-dividend date is. The second way that you can make money in investing in individual stocks is selling a stock for more money than what you bought it for. So, for example, if John has a company and his company is worth $100 and it's publicly traded in the stock market, and you can buy 1% each share or each stock of his company is valued at $1 for 1% of his company. You buy $1 worth of his company, so you own 1% of his company, and he happens to do great. His business flourishes, and by the end of the year, it's worth $500. So now your $1 investment for 1% of his company is now valued at $5, which is a $4 increase in, or $4 earnings that you would have had from that stock. If you decide to sell that stock now at the valuation of $5, at that point, you've gained $4. So it's called capital gains. You have $4 of earnings from that stock. But it's important that you know that it's not until you sell that stock that you actually have earned the money, because things can go differently. And December 31st, he's doing great. New Year's Eve's, he sold, whatever his product is, he sold multiple amounts of it. But then by the end of January, they realized his product was defective and his stock tanks. And now it's worth 50 cents. Well, your 1% is worth 50 cents, meaning his company is now only valued at $50. And so while if you had cashed out, if you'd sold your stock on December 31st, you would have gained $4. Since you waited until January 31st and his stock has now, or his company's value has now plummeted, now you've lost all those gainings plus 50 cents of the initial investment.
And that's exactly right. And there's a saying in the stock investing world that breaks this down to something very simple: buy low and sell high. Buy your stock at a low valuation and then sell it when that valuation is higher. And that's why there's such an influx of people giving advice to buy stocks now, because due to our current economic climate, a lot of stocks have dropped in value. And so the idea is that if you can get into a good stock now at a low value, that value would then go up and you could sell and make that price difference in the gain. So what we're going to do now is go and show you guys exactly how to buy and sell a stock. The app that we use for buying and trading and selling our stocks is called Robinhood. So we're going to pull up Robinhood now and show you guys exactly how this is done. So here's a quick demonstration of buying and selling a stock through Robinhood. This is one of the trade brokers that we use. We started using them years ago simply because they were commission free. A commission is when a brokerage company charges you to either buy or sell a stock. So say you were buying a stock for $5, the company could charge you a commission of 50 cents every time you wanted to buy that stock of $5. So you wouldn't just be paying $5, you would pay $5.50 to get that stock. But Robinhood was one of the first companies to go commission free and not charge you anything at all. But now there's multiple companies that do it. There's E-Trade, TD Ameritrade, Fidelity, TradeStation. There's plenty of options out there. So if you guys decide not to use Robinhood, we just ask that you make sure you get a commission-free brokerage, because why spend that money if you don't have to? So we're just going to step through a few things here. This is my personal Robinhood account. And like we said, we don't use this often for our financial independence journey. This was something we started with years ago, and we just watched it grow. So once you sign up for Robinhood, they ask you for basic information. They ask you for name, address, social security number for security reasons. And if you sign up today, you can get a free stock. We'll have a referral link below. And if you sign up with that referral link, you could bless us with a free stock as well. So if you like to do that, please feel free to do so. If you don't, no harm, no foul. So once you're signed up, it takes around 5 minutes for them to approve your application, and you can go in and start trading. So I'm going to go up to the search bar here. Here in the search bar is how you can search for any company. You can type in the name of the company. So for example, let's type in Target. I'm sure most of us know what Target is. And when you look at Target, you could see what Target's stock is currently valued at. It's currently valued at $113.42. Right under that, you can look at how they performed over a certain time period. And so over the last 3 months, Target has gone down. Multiple stocks have gone down over the last 3 months due to the situation that's going on in the economy right now. And so this can give you an idea of how a stock has performed and whether or not it may be a good investment for you. So the important part we do want to point out is where you see whether or not the stock is a dividend or not. Remember, we put the stocks into 2 major categories. It's either a dividend stock or a non-dividend stock. So if we come down here, we'll see dividend yield, and we see 2.33%. And so this means that Target is a dividend stock. An example of a non-dividend stock, if we go over to Tesla, and we see that they're valued currently at $751.70 per share of stock. It's pretty expensive. But if we look down at their dividend yield, we'll see that there's a dash through it. That means that they don't provide dividends. So the only way to make money off of this stock is buying at a low valuation or a lower valuation and selling at a higher valuation. While with the dividend stock, you can not only buy at a low valuation and sell at a higher valuation, but also get that dividend that's promised to you throughout the year. So what we're going to do now is go through showing you how to actually buy a stock. So we're going to buy a cheap stock, Groupon. We already own a share because we received it from free before, but right now Groupon is valued at 90 cents. And so in order to buy this stock, we come over here to the right side, we type in the number of shares that we want to buy, and then we go to review order. Right here, you're going to see your buying power that's available. I forgot to mention this, but when you sign up for Robinhood, it's going to ask you to link your bank account. And it's really, really simple and straightforward. You select the name of your bank account, and if it's a known bank that they're an affiliate with, you sign into your bank account and you choose which account that you have that you want to use to fund your stock investment account. So back over here, we're on Buy Groupon. We want to buy 1 share at 90 cents. And our buying power is $7.04. So I click review order, click buy, and the order is pending. The order was placed at 3/12, April 19th, 2020, and will start in the next trading session. So the trading sessions are when the stock market actually trades. This is Monday through Friday from 9:30 a.m. to 4 p.m. And so even though I bought this, right now is Sunday, I bought this at this amount, the trade doesn't officially happen until Monday morning when the stock market opens. And inversely, what I'm going to do is go ahead and sell a share of Groupon. I already own 1 share, so I'm going to show you how to sell that share. So we put in 1 here, pretty much the same process, just in reverse. And it tells you what you're doing. We're selling a share of Groupon. We click sell. And the market sale was placed at 3:13 p.m., April 19th, 2020, and will be sent at the start of the next trading session. So this is how you buy and sell stocks. It's pretty straightforward when it comes to this. But like we said, please do your research before you buy or sell any stock, because it is possible that a company could go out of business, which could mean that you lose all the value of your stock. So we don't want that to happen to you.
So we hope this video was very helpful to you guys, and if you guys have any questions or comments, please leave it below in the comment section. And if you haven't already subscribed, please subscribe, hit the notification bell, and like this video if you liked it, and share, even if it's something that you already knew information about. If you have any friends or family that could benefit from this video, please share it. And we hope to see you guys next time.
See you guys.